From our studios this week in Houston and Los Angeles, this is Green Tag Theme Park in 30. And this week, we're going to talk about the latest earnings reports from Six Flags and United Parks, which I would say have me somewhat cautiously optimistic, which is probably, for me, a good thing, I think.
I was going to say, for you, that's a stellar thing. For you, now I'm concerned because that could be, like the seventh sign of the apocalypse. Philip.
That's right. Or maybe I just had a stroke from this last weekend at Transworld. Who knows?
Yeah, that's true. That's possible too.
So Scott and I just got back from this year's Transworld's Halloween Attraction Show, which is the largest Halloween trade show in the world. And
as well as
talk
Christmas
about that
and interactive entertainment. And
I don't know if it's the largest Christmas show, maybe.
No, but it's co-located, so it's a pretty big show.
It's a pretty big show. So we're going to talk about that probably on the Unhinged episode because we'll be this will be earnings. So for those that want to,
if you've been watching the internet at all and you're interested in Halloween at all, you've probably seen more posts than you could possibly stomach about the show, because like I can't go through any of my social media without just post after post after post of all the stuff from the show. So we're going to get unhinged about that and talk about it in greater detail. But anyway, Sorry, I keep interrupting you. I haven't had any sleep either, so I'm.
That will be on our Patreon. You can go to Patreon and just search Green Tagged, or look at the link in our show notes for that Patreon link. So, okay. Let's begin with Six Flags. So the headline here that had the stock market initially tumbling on this news was that Six Flags reported a $206 million net loss in 2024 after the merger. And of course, the big thing was supposed to be the merger was going to save money and make money, and they reported a loss. So that caused the initial stock to fall. However, ultimately the stock did climb 2% because the CEO outlined the reasons why it happened and their plans and his expectation that they're going to have a 2% increase in attendance and a 3% rise in season pass sales, which now that they're a much bigger company is a big deal. So that's the gist of it. That's the nutshell. We're going to dig into a little bit, give you a little bit more context. But basically, I think if you just read the headlines, you might have been misled by that. It really isn't as bad, I think, as the headlines suggest. So first of all, how is it performing? So overall attendance is up. And just to clarify, what we're doing here is we're comparing the total numbers like merged with the numbers unmerged. And so basically we're trying to make this apples to apples. So we're looking at what it was last year, unmerged, and then what we're looking at this year with the merged numbers, and it's roughly a 3% increase over 2023. So basically, attendance is up. Revenue is also up. And guest spending is steady, if not slightly up a little bit, maybe 2% at some of the parks. So that's a pretty good picture where they have attendance up, they do have revenue up. So things are going in the right direction overall when you look at them, even after you kind of convert everything over into the thing, because the merger, remember, happened in July. And so essentially the numbers we're seeing are like basically jumping from like January through the end. It seems like there's a big jump because that's when they started reporting combined together. So it still did lose money. So why did it lose money? So
I was just going to say, how does this translate into the 206 million loss for 2020?
Yeah, exactly.
If we're comparing apples to apples.
That's a great question. And basically, merger related costs. I know Scott's like, it's almost like we had a script. So merger related costs were a big part of it. They had legal fees, integration costs, et cetera. They did a big non-cash tax charge that happened in Q4 as well. They also had higher operating costs, initially, and they did warn us about this, but of course, initially it means labor, maintenance, operational costs, all that comes in. The merger did add debt because they took on debt, which increased their interest payments for that. So all of those financial costs, basically like the financing costs, is what really ate into their profit. And it's also good to note there that like even though the Halloween events were strong, there was like higher cost that went out, for that kind of stuff. So you saw a lot of finances costs in. So the initial reaction, as I said, was that it dipped, but slightly ended up on a high note. However, there were some detractors out there, JP Morgan being the main one, that pointed out that the fourth quarter EBITDA was 30% lower than the Wall Street had actually anticipated. So kind of like, basically it's mixed, right? So you have some people who are like, oh, I buy into the future of that he's painting. And you have other analysts that are saying, right, but essentially what the CEO is saying, Richard Zimmerman is saying about how, as soon as we control costs, blah, blah, he's like, that's the best case scenario. Like, the best case scenario is that you're able to entirely control for these costs and you're able to drive attendance and all that. And so the detractors here say that they miss their Wall Street anticipated EBITDA marker, and that everything has to go perfectly, basically, for this vision to come true. But I guess the hope won out in this because the stock ended up going up. So, as I mentioned, some of the risk factors they're going to have, like, essentially it is still a difficult path, right? Because despite the fact they're growing attendance, they still have to regrow it without eroding their pricing power too much. And they did hint to that later about really trying to bring in more people and increase their that might cause their overall price per guest to go down, because they're going to have to be doing some discounts to bring people in. But that's tricky, right? You don't want to erode your pricing power too much, or it's going to have long-term consequences, especially when you lay it out over 40 parks, right? They do now have a higher cost base because, of course, they've integrated all this stuff together. And they are trying, again, this whole synergies, quote unquote synergies thing, right? They said 120 million in savings, but so far they've only managed to bring out 50. So, how long until that comes across, and can they balance all these different plates at the same time? So basically, the bottom line is, like, the company is making more money with increased attendance and spending, but it's also spending even more due to merger-related costs. And then in 2025, remember that they're going to invest 1.1 billion, or they're going to invest in I think 11 out of the 14 parks or whatnot. So they're like investing as well, in this coming season. And a lot also rests on Halloween. They called that out specifically, saying our strong fourth quarter results reflect an outstanding October performance and the incredibly popularity of fall and Halloween themed events. So basically, if they can turn that revenue growth into actual profits once the merger settles and they really bring up those synergies, and they don't erode their pricing too much, with trying to get in additional guests, and they roll out a good Halloween and then they could be in a really good position, which is what he is painting. So that's where we are.
And in fairness, I mean, let's kind of even break those down a little bit. When you've got the merger-related costs, the merger-related expenses, that's a one-time thing. They knew that was coming. That's not a surprise. Yeah. That does not reflect badly on any of the business decisions that they have made, because the merger itself, they knew going into it, had merger-related expenses. So there's that. And that, like I said, one-time thing. That's not a, oh crap, look, we found more merger expenses. No, that's not going to happen. It's not going to happen. So we have to make sure they don't say that in the next reporting of the finances. I think that, if they are, we talk about the synergy savings. Well, again, when you're talking about a company that is now this large, those synergy savings are not going to happen overnight.
Yep.
It's more like turning an aircraft carrier than turning a speedboat. You're gonna need a little runway to do it. So it does not surprise me that they have not reached their synergy savings goals, and it's been less than a year, so it's not really even fair to expect that you're going to start seeing that. Right. It shows me is it's on track. It's not there, but it's heading in the right direction. So, and I also, I can't tell you how many parks I have worked with or how many projects I have worked on where they say, well, Halloween is going to make or break us.
Hmm.
Um, that's always the fallback, and it's partially because of when it happens in the year, and
Yep.
it's partially because they know most organizations can't squeeze any more out of Christmas, so they always put it on Halloween and say, because quite honestly, Halloween has less financial competition from a customer standpoint. People
Yep.
have, when the Christmas season rolls around, there's Christmas travel, there's Christmas shopping, there's Christmas, um, all Christmas parties. There's all kinds of of competition for the dollar at the Christmas season, and so they know it's more difficult to grow income during the Christmas season or the holiday season than it is the Halloween season. And quite honestly, Flags, no matter how you feel about their Halloween product, or even Cedar Fair, no matter how you feel about their Halloween product, whether you think it's the best thing since sliced bread or you think it's absolute garbage, it doesn't matter because it's been pretty successful. I mean, it's
Yeah.
continued to make money,
Yep.
so the fact that they're just saying, well, we got to make sure that that continues. Well, yeah, the
Yeah.
chances of that are pretty slim that it's going to just magically not make money anymore. What could hurt them is if some, and I hope this doesn't happen, but if some catastrophic experience or event happened that created either a lawsuit or a giant insurance claim, that could be detrimental. So
Yep.
I think they're putting that out there as just in case. Um, so it sounds like, uh, since we're all saying kind of the same thing, it sounds like the investors agree with us. And certainly those who know the industry are looking at it going, yeah, they're probably painting a pretty realistic picture. It's
Yeah.
positive, but it's realistically positive. It's not,
Right. Yeah.
it's not out of the realm of possibility by any stretch of the imagination.
Yes. I agree with that. It's not out of the realm of possibility, but I do like the angle that some of the analysts, they're not industry folks, but I think they kind of are correct in that they're like, the problem with this scenario that he's painting is that it's the best case scenario. And you always say like it never goes according to plan. And
True.
you know,
True.
like in this, there's nothing about there, like there's no room for failure, basically. Like everything has to go right. Like, they have to realize the full synergy. They have to make sure Halloween hits off well. They have to not have a dip in attendance. They have to not have a dip in too much of a dip in per cap spending, as long as they increase in attendance. But if they don't increase attendance, they need a higher per cap spend. Like everything has to go right in order to get there, because even if they had the extra, whatever 100 million, that still would not make up for the loss. And so they need everything to go right. And what about weather?
Well,
Which,
so in other words, it's exactly the same as every other earnings report we've talked about. No earnings report gives any wiggle room.
well, I think I do think the Disney one probably was the most positive, where they did have the most room for wiggle, like room for wiggle, like they, oh God, they like Disney ultimately, like Disney streaming is kind of like meh, but it could still perform terribly, or like they could just have one box office hit or none or whatever. I mean, like they have sectors in which they could underperform and still be fine, because there's so much margin in the parks product. And I don't think that is the case here, because Six Flags is less diversified,
Well,
right?
yeah,
Like they have.
I was going to say, I agree with you 100%. I was just going to make the same point. They have more wiggle room because they have a more diverse portfolio.
Yep. Yep. And
That's
Six
why
Flags is kind of like all betting on this working. And if the economy softens and there's less people are attending attractions less or whatever. And in a weird way, this is a weird thing. I was thinking about this, like Disney is really centralized, at least their parks divisions, in a few markets, which we've talked about. But
Mhm.
in one way, Six Flags is, they have so many locations that it kind of protects them against weather, because like they have so many, they're like, okay, well, if some are closed, others are open. But on the flip side, they almost have more exposure to all Americans. And so like, a lot of their parks are in more rural areas. And if those areas are hit harder with economic uncertainty, then they might, what I mean? It's weird. It's this weird double-edged sword. Like they're protected against some things that Disney and Universal are vulnerable to, but they're vulnerable to other options that, those places aren't as much.
Was there any mention of the Qiddiya City Park?
No.
Interesting.
Yeah, I did think that was, and it might be because I think it's only an operating agreement, right? Like they just manage it. They don't, they don't like
Right, but
own it.
I would think that since we're talking about the court of public opinion here, that they would have at least made some reference to it in regards to reaching out, expanding, trying new things, but they didn't. So,
Yep.
Interesting. That's very interesting. Yeah. Again, I think my point being, in any earnings call, they are going to point out the best case scenario.
Yep. Well, that's their job, right? Their job is to
That's
argue the
everybody's
best
job.
case
I'm not,
scenario.
and I'm saying that's kind of what I'm saying. We're now comparing apples to apples when it comes to comparing this earnings call to Disney's earnings call, to Universal's earnings call. They've all
Yep.
painted a very positive, rosy light where things have to align in order for it to be perfect. If there are 5 hurricanes in Florida, knock wood, if there are 5 hurricanes in Florida, please God no, then who knows? Then who knows what Disney's park performance is going to be?
Yep.
And
Exactly. Yeah. Yeah. It just seems like right now they're in a less advantageous position on some things, just because they have, again, the pricing power isn't as strong as Disney, and so
Right.
they have less margin effectively, but more parks. So if they could centralize the synergy and get Halloween rolling out to areas that are underserved, yeah, could be great. But we said that when the merger was initially announced, right? So I think I agree with you in terms of, we're just kind of, all this is normal and we're just waiting. I think that some analysts are just kind of trying to move too quickly. They're looking at this and going, oh my God. It's like, well, it takes time, like you said, to actually integrate this. It's only been a few months. And in the theme park world, that's not a long time.
No, not at all.
Yeah.
Yeah. Halloween
Okay.
starts in February in a theme park. So,
Yeah. So it is encouraged. The last thing I was going to say, they mentioned too, it is encouraging that their annual pass sales, like the new annual pass as multi-parks, is up like 3%, which that's encouraging. Yeah. So, okay. United Parks, much. I'm not nearly as optimistic about this one, actually. I'm not sure, this is tough. Okay. So basically, United Parks reported a decline in attendance and revenue in 2024, attributing the losses to the hurricanes, Debbie, Milton, and Helene, which collectively cost the company 432,000 visitors, according to them. They plan to introduce new attractions in Orlando and Tampa, aiming to boost attendance ahead of Epic. So let's give you all the big picture. So first of all, the 3 main things: declining performance, blaming the weather, and struggling to grow. So they're declining revenue. Revenue was flat, if not a tiny bit down. Net income dropped 2.9%. Attendance was also flat, but the guests spent a little bit more, which kept the profits from kind of dipping a little bit more. They blame the weather. And this is according to them. They claim that the hurricanes cost, like I said, 432,000 visitors in 2024, and they said attendance would have grown at 2% otherwise. But I just think that's ridiculous. Like you'd be like, well, we think this is how much it would have cost, but what, if those hurricanes didn't happen, which is just ridiculous, because we know that more hurricanes are going to happen. But anyway, they aren't really losing customers yet, but they aren't gaining them, basically. So, and this is all, again, ahead of Epic opening. And so, speaking of Epic, they were grilled about Epic, grilled, like in every, actually they were grilled a lot more than I think Disney was, and that which is weird, but which I think in its own case kind of says that people are not buying exactly what they're selling. But basically, they're saying it's all good news. They're making the argument that, not that Scott and I made, not that we're claiming this for them, but we're making, they're saying that they're kind of taking the rising tide argument and saying that it's just going to be better for everybody. And
the halo effect.
Yes.
The halo effect.
Yeah. The halo effect. Yeah. He said, we're aware that there's a new park coming to Orlando next year, which is hilarious. We welcome more people to town. I'm sure there's going to be days when Epic is doing very well and it is crowded. We're going to feel that a little bit. but we need to execute on our plans to drive more people to our parks. What plans, you might ask, which people did ask, to which they replied, not quite concepts of a plan, but pretty close. They said that they have new IP partnerships and major new rides that are in the works, but no details whatsoever have been announced about any of that. They also talked about launching major new attractions tied to a recognizable brand in 2025, but didn't really talk about anything. And in terms of their strategy, when asked about how they compare to Epic, he said, "We are a differentiated product than a Universal Park. We're a better value. We have a good value proposition. Those, among lots of other things, gives us confidence that we can continue to participate in the market growth." And analysts were not really convinced. They don't see, in this case, I think Scott and I agree, about the halo effect for Disney, but I think for me, I don't agree with it with SeaWorld, because I think that, again, the pricing power, the thing, like if you're going to show up and you're going to add something to your vacation, I think you're going to add Disney before you're going to add SeaWorld. And I think that their whole, quote unquote value proposition, I don't think that's really going to tip the scale, unless you're talking where they're going to discount their ticket to like $15 or something. Like, I don't think that you're going to, I think the difference between like those tickets, I don't think is going to tip the scale for people when they could visit Disney World versus SeaWorld with their, spare days. I don't buy that they're selling. So essentially, overall, numbers not great, flat, if not slipping. They're downplaying the Epic universe thing. The numbers are slipping. They're just saying we're different, but I don't know if that's enough. Scott, what do you think?
Well, I think, in fairness, because again, I have history. I have history with this company.
You do have a lot of history with.
You have a lot of history with this company, and I've worked independently. So I've worked on both sides, both as an internal and as an independent contractor on the outside, looking in. I think that they're in a unique position, it seems, and I think their call kind of reflects this, or their earnings picture kind of reflects this. They keep saying that they are unique, which, in fairness, they are. The parks are they're not, what you can experience at SeaWorld is nothing like anything you can experience at any of the Disney parks.
No,
it's nothing like you can experience at any of the Universal parks. It is unique. It is different.
I think Animal Kingdom is the closest, but it doesn't have, the aquarium. It doesn't have a lot of the animals. It doesn't, they have the safari Animal Kingdom, but they don't have
they don't have the signature. They don't have the signature animals. They don't have the they don't have the killer whales. They don't have the penguins. They don't have the dolphins. That's the holy trinity of the SeaWorld's animal collection. So they're right. They are unique. What they have to do, in my opinion, is tap into that uniqueness and stop trying to be everybody else. I think that, I have no idea what this new IP is going to be. I just did a quick search to see if I could find if anybody was speculating. There's not a lot of speculation as what it is. There's an awful lot of discussion about what it can't be because all the other parks have them already. So we'll see.
It's not going to be Minecraft.
I mean, they still have, there's still a Sesame connection, a Sesame Street connection. There is still for the holiday season, for the Christmas season, there's still a Rudolph the Red-Nosed Reindeer connection. But what other big IPs are out there? And I have no idea. I'm curious to see what that is. So, if they feel that IP is the way to go, I would even venture to say, if they are truly trying to be different, take the opposite approach. What isn't your competition doing? And both Epic and Disney are leaning heavily into IP. Now, I'm not saying that going away from IP is definitely going to work, But if you're saying we're different, we're unique, then be different and unique. Don't be a less than impression of Disney or Universal.
Yeah.
Um,
Yeah.
so, dive into what makes the parks unique and really embrace that. And I don't know what that is. I don't know whether that is the animal component of the SeaWorld parks or the Busch parks, because Busch Gardens in Tampa still has a ton of animals. Williamsburg has a bunch of historic charm to it, and San Antonio is just San Antonio is really the beast in the area. They're a great park and they run themselves very smart. So, but what is it that's unique about the United Parks and Resorts brand? That's something that has to really be pushed forward, and they need to educate their guests and their potential guests as to what that uniqueness is, and not just say we're different without saying how or why.
Yeah.
So to me, it sounds more like a communications situation and tapping into what is exciting from a guest standpoint. Let me put it this way: is SeaWorld going to pull people away from a second day at Epic Universe? No, it's not.
Mm-hmm.
But once again, looking at, and we've talked about this several times, looking at international tourists, when they come to a place, they sit down and want to see everything there is to see there. And European tourists especially are very fond of animal experiences.
Yep.
And SeaWorld is really the only game in town other than Animal Kingdom. But even then, I don't think of Animal Kingdom. I think of Animal Kingdom as using animals as a thematic tool, not necessarily as a zoo or an aquarium.
Yeah. A lot of what you're saying, it kind of reminds me of what we talked about when we talked about we did our episode on Saudi and the difference, between Boulevard World and the strategy there and the strategy here, and how they were very clear at Boulevard World. Like they're like, now that I think about it, they're so clear about their strategy. We're open for this. This is what we do. We're for the locals. We bring in pop culture. We bring in all this.
But I mean, it's actually the entity is actually called Riyadh Seasonal, or Seasonal Riyadh. Can't remember which it is, but they basically say we're open here, we're closed here. We open here, we close here. During that time, we will have different. I don't even know whether I'll call them pop-ups, but to a certain extent, yes, different pop-ups that will represent different IPs, different brands. We saw that when we were there, and then we close, and then we go away and save money.
Yep. Well, and it's interesting because, to your point, right? Like I think if I'm looking at the differences between the Six Flags one and this one, it's pretty clear. Like Six Flags has kind of a plan, and they are trying to sell you on that vision, and people are mostly buying it, right? And they also have the numbers to back it up. They have the attendance growth. They have this and that. So even though they're like bleeding money, they're like, we have a plan. We're gonna, bring all of this to all. They have all these parks. They have all these regional. They have a lot of things that make them different, right? And then, like to your point with United, they're like concepts of a plan here in the corner. And we're like, what's the plan? And they're like, well, yeah. And like, what is it though? Tell us how you're going to get yourself out of this hole. And on top of that, they don't have the numbers to back it up, right? Like they're flat or declining in their main metrics. And they also don't have a plan that they're communicating. Maybe they do have it and they're not telling us, but they're not differentiated. And, again, like you said, fighting an IP battle, they're not necessarily going to win that fight with people with the other brands. And then what are they going to fight Six Flags on roller coasters? Or like the only thing they have that nobody else can win is the animals. And potentially they need to make a pivot like Boulevard did, where they're like, we're going to do more seasonal local focus for that type of stuff and hone in on the animals and do stuff with the animals. Like what you always say, one roller coaster could pay for so many festivals that they could do there if they just didn't build a roller coaster. And is that coaster really going to win when compared to the other parks?
And I think they're trying to do some of that. I think they are trying to do as many festivals as possible. I mean, Mardi Gras is going on right now, but I think they have to. When I used the term earlier, lean in. I think they need to lean into what they know how to do and lean into what they do well. There was a time where they were known as the festival parks. They were the ones who really did the festivals. There was a time where Howl-O-Scream in Tampa was considered by many in the industry to actually be outperforming, from a customer experience standpoint, outperforming Universal Halloween Horror Nights. But now, like, for example, there is a Mardi Gras situation going on that is not being, in my opinion, not being leaned into. And I'm concerned that it's overpromising and underdelivering. This is a series of parks that is filled with a bunch of really smart, hardworking people. It is a series of parks that have the potential to be a contender, but they just have to lean into what they do well and stop trying to be everybody else. I think that's the success that we're seeing with Universal pretty much across the board. They know what they do well, and they don't try to do other stuff. So exactly. We'll see how that all turns out. We'll also see what happens when we come back next week, because we're out of time for this week. So on behalf of Philip Hernandez and myself, Scott Swenson, this is Green Tagged, Theme Park in 30. And thank you once again for watching or listening. And some of you we will see in our Patreon show, Green Tagged Unhinged. And the rest of you, we'll see all next week. Thanks.